How's it going, everyone? Welcome back to the weekly trading review. This week is the week of March 24th, starting last Monday here, ending on the 30th. I took 10 trades this week, 8-day trades, 2 swings, both of which are currently open. So let's quickly talk about what happened with the market, and then we'll get into some of the trades. So starting off last week where we closed on that Friday on the 21st, market had staged a big move lower and was bouncing up. Now we'd hit some resistance at this gap around 569-ish, 570. And the market had come back, tested the downside over here, and had a little bit of buying. So at this point, we see, okay, well, the seller's already pounding the door over here. There's probably not that much upside because it wasn't a swift bounce. If we look at something, if I go back again over here, right? Look at the comparison between this bounce, where we're actually making a new high of the day almost every day, right? New high, new high. This day we erase all the gains. New high, 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 new high. And right here, and then it starts to slow off, and we stop making new high of the days in this compression range, or a new relative high versus the prior day. If you look at over here, right, we get over here. Well, if we make a new high over here, but then not so much over here, not so much over here, so not spending that much time really rallying. We get this big bounce up on the 24th. I think there was some tariff news. I'll have to check my notes again, but I believe there was some tariff news that on the reciprocal tariffs, Trump is not going to be as aggressive. He's going to maybe give some leniency. So we had some rally on that. There was also this FOMC statement on the 20th that was a dud too. And, maybe some selling over here. This is kind of a fake out move, but nothing really, big ol' nothing burger here. So we got to the 200 SMA. We stalled here for a second, and we got some nice selling over there on the 26th. Now, on that selling, I know so there was a couple traders that took some shorts there, which I think makes a lot of sense. One important TA tip that I saw is that when the move down is very strong, you can get a little bit more aggressive with your entries because there's a higher chance of this having follow through. So you don't actually have to wait for this confirmation to break. Now, I was being a little bit more prudent. I wanted to see maybe a nice little like double top lower high coming back over here to 570 and then a smackdown. But then we kind of just got the smackdown right away. So it wasn't my ideal entry for taking shorts, but I did take some swing shorts on Friday over here. Towards the close, I took Caesar, short, and NTAP. I'll get into those a little bit later. We're going to go through the day trades first. But I took both of those short with a good amount of time in mind. Caesar has earnings at the end of the month, so I have a whole month on that swing. NTAP has 6 weeks out, so I have a lot of time for my thesis to play out on both the market and the stock for these. So looking at this week, I think all of my trades were short except one trade. So I had good alignment with the market, which is important. If you remember, in this stretch over here in April and March, I was kind of trading against the market and I wasn't seeing a lot of success. And it was not good for making money. In fact, it was very good for losing money. So that's one thing I'm checking now more often. Let's start with the 26th here is when I took my first trade. So I did not trade Monday or Tuesday. Let's walk through that M5 price action for both of those days. So Monday, we got this big gap up. Most of the gains were realized overnight, and we had this ceiling at the 200 that I didn't really want to trade. So I think there was maybe one short you could have taken over here if you wanted to, when this trend sort of stalls out on this red candle. You can maybe take a late day long over here if you wanted to when this trend line breaks. So there was maybe a little bit of room, but a good day to not trade, in my opinion. Now, on the next day, on Tuesday, flat open. See, look at how the volume is very, very low. Lots of choppy price action, bounce stalls, moves up here, bounce stalls, move up here, but we're not actually able to crack through that 200 SMA yet. So at this point, I mean, this whole move up, this especially on Monday, allowed us to find some nice relatively weak stocks. And then once we started to get some follow through on those stocks, we started seeing some selling from the market. We got this double top here, slightly lower high on the 26th, and we started to see a nice little bearish trend day emerge. So this was a really nice bearish trend day that we could kind of sink our teeth into because we had some selling, and then this move over here kind of broke through the low of the day pretty early, and we had a nice drift lower. So I think I got into this day a little bit later. So I kind of missed some of this initial move on the day. But first trade I took was CLS short, and I took this towards the end of the day. And this was my only trade on the 26th. So CLS with this nice crackdown through this high minus trend line. Really nice selling. Some potential support over here. But I liked the setup on the daily chart and rejected off that 100-day SMA and headroom to the 200. So liked that setup for a day trade. And let's look at that M5 chart. Here we go. Okay, so here's the M5 chart. We get a big move down lower, a little bit of double top grind up, and we stall here at VWAP, and then we start to come back down. Now, at this point over here, the move has some relative strength, so it's not as ideal. The best entry is probably somewhere 1125, 1130. So if we look at, 1125, 1130 is actually holding up pretty well, and then it starts to come down. So that tells me that, okay, well, there might be some support over here. Then the move starts to accelerate, and it gains a little bit of relative weakness over here later in the day. As if we look at where does it gain relative weakness from about 1220 onwards, and that's when the market starts to stall over here. CLS actually starts to move and sink a little bit lower. So I like that. So I entered at 250, which I believe was the close of this candle right here. So I entered at 87.50, and here was the setup that I saw on CLS. I would have preferred to get it actually one candle earlier. I think this is a pretty decent close, but this is some additional confirmation. We broke through there was some support right here, so we broke through that support, and we had a little bit of follow through. Here's SPY at 245. Nice, so new low of the day here. So this is the setup I was trading. I liked what I saw. Felt we had some room to continue. Now SPY ended up stalling out and then pretty much flatlining. CLS moved down lower, then also kind of flatlined over here. So I took the scratch at 340. So right over here. I scratched out for 80 at 87.56. Given that, look, it was an hour, and the end of the day, move is not really happening over here. And SPY is also dead. Not really rallying for the end of the day, but kind of just stalling out. So, and it starts to break up higher right around here. Not able to get through that low of the day. So, SPY is rallying up. This saw kind of flat. So, take the scratch on CLS. Not too bad. I think the mistake I made over here was you want to short a little bit earlier on this move. Maybe 230, 235. So, I want to be short before we get that drop lower. The other thing I noticed on this drop too, that it was a marginal new low. So we got this drop. We couldn't really distance ourselves from it. Versus here, right? We get this low, drop, 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 and then we start to stall over here. So we're actually made some decent moves down, right? From here to here to here. And then we start to stall over here. So that was CLS. There was also, I believe, the AVWAP-Q and the 8 EMA kind of around this area. So I think that was actually the level that I was drawing on my chart. And I probably wanted to see that level confirm to break through. So that's probably why I waited a little bit before going long on CLS. But the better move was to find a stock that I think was a little bit more relatively weak, or even just take it over here. And then I have some cushion on the low of the day over here. All right, so next day was 327. Pretty dead day over here, but we had this move down lower, move down higher. So on these choppy days, it's nice because it gives us time to find relative strength and weakness when the market is moving back and forth. So first trade I took 2 trades on Tesla on today. So where was it? It was on the 26th. So Tesla rejected from the 200-day SMA over here. And let's go to this setup. Okay, so first thing you notice that we get this rejection. I think the 200 SMA is actually a little bit higher on that day, but we come back lower, and Tesla is compressing right over here. So I take this short actually right here at about 276. I'm day trade short 60 shares at this size. I was really liking this candle, and so this is the setup on Tesla. It was strong earlier, then had some nice relative weakness, and I was playing the rejection off of that 200-day SMA. It was below VWAP, and had some room to the low of the day. So here was Tesla, and it was flat all the way over here. And if you look at what the market did from 1245 onwards, here we go, market from, it's the right day? It's the right day. From 1, here we go. There's the bounce I was playing. So from 1 onwards, right, market is rallying from 105, 110. If I select Tesla, 105, 110, kind of stalling. And then as soon as we get a little bit of weakness, we get this nice long red candle. So I wish I got this candle to close right somewhere over here at 277. That was my ideal entry, but then it didn't. So I had to wait for the next candle to go. Otherwise, we could have still been in that compression. So was not the most ideal entry candle. So I got it over here. I put my bid higher, which was nice. I got a little bit of follow through, and I actually added on this follow through. So I added 15 shares at 247.50. So my average price was 275.70. And added because I was like, hey, look, we're making a nice move lower. Tesla has some confirmation, and then I'll probably try to take some profits at the low of the day over here. Paused a little bit, started to rally higher, pulled up a little bit higher here, which is fine. And then it kind of stalled out. So when I saw this green candle on 130, I was like, all right, well, not crazy, but I want to see this kind of get smacked down because this is supposed to be a pretty quick trade. And we know that Tesla is still green for the day. So I'm not looking to get crazy on this trade. He's either got to produce quickly or I'm going to scratch out of the trade. That was my plan going into it. So market kind of stalling here. Tesla getting a little bit of relative strength. So close out this trade for basically a scratch at 275.93. It's unfortunate. I had a chance to take profits. Can be a little tricky in these scalps. But I was like, all right, look, had a chance to take profits, didn't take, so I scratched out of the trade, and I'll see if Tesla sets up again later. So I'm over here. I'm like, all right, well, look, Tesla's testing this little support over here, and I get in on this candle at this is a second trade here, 275.50. And my stop from both these trades is probably, for the second trade was probably like somewhere over here at VWAP, in case that happens, so I could take like a worst case scenario move up against me. The mistake I made of this candle was that I didn't really let it finish closing, right? And it's kind of interesting because in this candle, if I'd entered earlier, right, you got to get the stop out. So I waited for this candle to finish. On this candle, I didn't wait for this candle to finish, and it closed like that. And then we got the rally up higher over here. So on that second Tesla trade, I waited for a decent amount of time here to see if it could try to get lower. And then I ended up, I think, taking the loss right at 340. So I closed it for a loss at 278. That was a decent loss of the day. And of course, my luck, 2 candles later, I get this long red candle. But you can't really beat yourself up over a candle like that because you have to look back. Hindsight will be 2020, but you got to look back and say, okay, well, based on everything I saw here, was I predicting a long red candle? Not really. It's a day trade too. Nice, relatively weak. If I had a longer time duration, I would be fine holding it. But because I needed something to produce within a certain amount of time, and it didn't produce, then I have to change my thesis. So this candle right here, to me, not super predictable. I mean, maybe you could say, oh, we bounced here and then we get the crackdown. But, given what the market was doing that day, I don't think I didn't really see like a whole, what's a high, low. This is a $5.50 candle. Did not see that in a single move. So the real improvement on this trade was just one, not even taking it in the first place. This is an avoidable trade because this was not a good entry. So avoiding this in the first place. And then even on this entry, the second mistake was after we came down lower here and we got this second hammer. This is where I should have scratched out of the trade, because I'm fine taking a little bit of heat and seeing if it can crack down here. At this point, this could still just be a marginal new high, and then we crack down this kind of upward sloping trend line, but it needed to happen on this move down lower, right? So this is still fine, and then when I see this candle, I'm a lot less fine. So that's my chance. When did it close? Closed at 276.46. So instead of taking a $2.50 loss, I would have taken a $1 loss on a bad entry. So that was the mistake I made on Tesla. Okay, next trade. I made one final trade on the 27th here, which was Abbott, ABT. And let's look at that D1 chart first. So this was the Abbott D1 compression break through the 50 and a VWAP E. There was some horizontal resistance here at around $32. Very nice long for that day, and pretty dead day. So on a dead day where we see a little bit of buying and we saw a dip lower, right? This gave me time to find some relatively strong longs, and then I could enter them. So there's Abbott. Let's look into that M5 chart. Okay, so beautiful M5 chart, and that trend line shows exactly where I enter. And here's this actually line where that was my my alert on the downside. So market rallies, and we get this really nice move up. What I like about is that market has a small gap down, moves lower, and then grinds up higher. Abbott, small gap up, and then moves up higher through the 50 and through that A VWAP E. So it gets above here, and then it takes some time to digest those gains. So I'm seeing it over here, nice relative strength. It's hugging the high of the day really well. It's above VWAP, and it's holding that D1 support. So we get a test here, we get a test here, and look at the low here. Low is 30.08, another low 30.12, another low over here 30.20, so slightly higher lows. And it holds all of these gains while the market starts to rally down. So if you look at it, market starts to rally maybe from 11. 11's the high, and it goes all the way down here from 11 to maybe about 2. So first thing you notice on Abbott is that it's rallying up while the market's flat, and it peaks at 11.50. So it starts to get pulled down a lot later, and it's making higher lows when the market is making lower lows during that time frame. And then at 210, right, market starts to find support and gets above VWAP. Here is Abbott is breaking through this high minus trend line. So I take it at the at this candle right here. So we break through here, we poke through here, which is nice. And this candle at 210, market has poked above VWAP. So I'm saying, all right, well, look, this is looking pretty good. Let me just give it another candle here and see how the market holds. Is holding VWAP, is Abbott gonna poke and then get smacked down lower, or is it not? So we get the nice red candle, the next bar, and then we start to inch up higher. And when I see this, I'm like, okay, look, we got some good volume coming in over here. We got this little poke up at 230, so I enter at the 234 candle, and here's SPY at 230. My thesis here is like, look, SPY is still at VWAP, but it's a choppy day. We've stalled out here, and we haven't managed to actually test the low of the day. We've also made a higher high at this juncture as well. So I think we're going to have a little bit of a tailwind, and I don't think we're going to have a headwind. So I'm leaning on this level, this prior low as support, and I want to see this hold and market try to advance up higher. For Abbott over here, we have a nice move. I think it's going to clear the high of the day. VWAP is my stop, so I think I took 150 shares long at 130.68. So right over here, with my stop at 129.68, so about a close below VWAP. So we got some follow through, which was looking good. We came back the high of the day. We got a little bit of a red candle here on volume at 255. Market had a bit red candle here, but was still holding up pretty well. And I wanted to see this red candle erased. I also saw that, look, we broke through here, so Abbott's probably going to test that high of the day on a breakout before finding some more support and then inching up higher. So test the high of the day, and then we are grinding up higher. So this is looking pretty good at this point, 315. Now it's grinding up higher. Market is moving my favor, so I got the market right and I got the stock right. What I'm watching for here is if we get some sort of long green candle, I'm going to take gains into strength because it's a choppy day. And I'd also get about $1. So I was risking $1, take $1. So that is some really nice risk reward, especially in a high win rate trade. Now, if it pokes back below the 8, it hits the 8 EMA here and then comes back up, that's also fine. I can stay in the trade. It means the move is a little bit more sustainable. The other part is if Abbott kind of stalls out for a little bit over here and then starts to come down, then I'll take a smaller gain. So next candle, we get a long green candle, and I take the win at 131.65. So just about a $1 win on that stock, which was a really nice trade. And I also know that at 132 is some resistance. So that was a pretty good win. And then we had a little bit of follow through, but then it kind of just died. You can see it got almost right to the 132 level, kind of died. And then we poked back above it, hit some little support, and then you can see that there is some selling coming in over here. So that was Abbott. That was a really, really good textbook trade. A couple things I liked about that. It was a good D1 setup. It was a good M5 setup, and it had a really good entry, and I got the market right. So when you get all those things, it just feels really easy, and that's kind of the thing I'm trying to remind myself here is that find those trades that when it enters, it's like, okay, this is a really good entry, really good trade. That gives me a lot more confidence. Okay. So next day, it is 328. We get a flat, small gap down at the low of the day. Test, start to crack through it early. So kind of difficult day because you have to get short somewhere over here. A lot of stocks have actually made some big runs over the past couple of days given the selling pressure. So there's a lot of stocks you feel like you're chasing, especially when we get this big move lower with no bounce. So at this juncture, right, I'm waiting for a bounce, and I'm seeing that, all right, well, we're kind of stalling out here and no bounce. So this is probably the bounce that we're going to get. And if we crack through the low of the day on a nice red candle here, I'm going to go short. So we crack the low of the day right here. I'm like, perfect. I'm going to get short. So I'm short SPY at 557. I'm day trade short 23 shares at 57.07. That's actually a lower size because I'm going to give it space on the D1 chart in case I feel like swinging it. I'll take that short. So that was that. The other one here that I took was AVGO. I spelled that wrong. All right, so AVGO, pretty bearish setup. Now, it was kind of a little bit far out of the gate for my taste to swing, but there was still some nice pressure to day trade. One thing I'll note on the day trade is like I like these fresher moves. So like a day trade here or even here is not terrible. But since we had like a couple of days of pretty big selling from resistance over here at 196, a lot of this move is recognized the downside. So when we get into the trade, I think that's going to be maybe a sort of a slight inaccuracy on my part in terms of picking a stock. Not a bad stock. There's some people that make some money on that today, but also not the best. So we got to move down lower over here, and AVGO starts to gain some relative weakness right over here at 1145, 1150. Not really rallying with the market, especially when the market's rallying over here. AVGO is starting to pivot lower. So I enter AVGO right over here at 1215 because I wanted to see this low of the day get cracked. So I think in terms of the market entry, it's pretty good. In terms of the stock entry, it's okay. I think it's good market sync, so my risk is going to be pretty low. However, look at this pretty choppy stock, right? I can probably get a better price at that 8 EMA. So I entered the stock at, what did I enter in here at 166.70. Probably get entered it somewhere like at 167, maybe 167.20. And you might say, oh, that's only 50 cents. But, those 50 cents and things like that can add up, in my opinion. And for me, I need that sort of precision when I'm day trading. So enter right over here, 167.70. Stock kind of flatlines for a little bit, pops up over here, comes back down, doesn't do a whole lot. So look at AVGO and then look at the market. Market is from here. I wanted to see some stronger move down lower with a couple more consecutive reds. You can see after this move lower, we got a very weak bounce and then a second move lower. So that tells me that, okay, we're probably in some sort of bearish channel versus this strong move here. So we have a strong move that transformed into a bearish channel. And I can ride this down as long as that bearish channel starts to hold. And when we start to stall out for a while, or maybe we see a selling climax, then I'm going to take gains on my day trade shorts. So AVGO market going down, AVGO flatlining here. So I take the scratch. Basically, I took a 50-cent loss on this guy at 167.20. So I took it, I think somewhere here at 136. So I took it right over here is where I took the loss. I had a chance to scratch out maybe here or take a tiny loss here. But I didn't because I waited for this candle to close. I was like, all right, we could have this long green solo. Let me see if it can actually get above this line. And we finished with the hammer. So that was my time to get out of the trade. Now, you can see it took a while for it to actually get through my stop, which was at VWAP. But because I time stopped this, it actually saved me from taking a much bigger loss. So pretty happy overall with AVGO. I would say there's maybe a slightly better entry I could have taken on that, and maybe some potentially better stock selection I could have done. But I'm not too upset about that trade. I think overall there was a lot of good decisions, and on this kind of day, a lot of stocks kind of fizzled out, and they didn't do a whole lot. So the other trade I took on this day was Lulu. So I wanted some stock that wouldn't move under its own power a little bit more. And it's hard because when you have these flat open go days with no bounce, like really, like the market's so weak that it's almost like almost any short can work. But, because you have so much selling pressure that there's not going to be a ton of stocks that immediately get off the deck. And when SPY is a really good short intraday, sometimes it can be difficult in the strong trade. It can be difficult to find stocks that are really kind of, doing their own thing. But Lulu's one had a big drop from earnings, and I took it short right over here at 12.40. So pretty much the close of this candle, I went short Lulu, 30 shares at 289.71. And this was a setup. So I like the setup. I would have ideally liked to get in one candle earlier right here at this 12.30 candle. That would have been my ideal candle to get short at. Then Lulu ended up kind of having this like flat channel here, pretty bearish, not really doing a whole lot. Again, this is happening while SPY is drifting lower. So didn't have a lot of predictive ability on Lulu, so I took a tiny loss here at 291.36 at 2 o'clock. So right over here, I took a small loss on the position. It was moving flat, and the market was moving down, so got out of it. And yeah, look, it had a little bit of follow through here, but it's so hard to predict this, right? Tail, 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 tail. There's all the support coming into play here, and just really unable to crack that low of the day. So on Lulu, I think again, slightly better entry on this is kind of the only inaccuracy I would kind of change here. Other than that, I think it was a good pick for my part, and market just didn't quite produce. I thought we could see a little bit more selling on that weak stock. This is a really big drop, I know, so I wasn't going for anything crazy. I thought, all right, with a market tailwind, it has a chance to maybe get to the low of the day, and I'm cool with taking, $2-3 on Lulu if it can go to the low of the day. All right, now let's go to the Yep, that was the 28th. There we go. That was Friday. So, one other trade. I guess this was technically a lotto. I took Dow short on that day. Broke through this downward sloping trend line. Pretty bearish chart. I think it's an energy stock. And setup has some decent option liquidity here. So here's a setup on Dow. And I took the March 28th 34.50 puts for 28 cents. I took that at 216. So here was that. We got some nice follow through here and then started to kind of climb up over here. So I exited the trade at 256. So I exited the trade right over here when it started to close above that 8 EMA. Looks like this might have been a bit of a selling climax. And it was starting to bounce when the market was doing nothing and kind of being flat. So figured that after a big move, that was my time to get out of the trade. The only mistake I made on this one was that the bid-ask spread was a little bit wide, so I got a kind of a bad fill. I got out for I got it at 17 cents when I probably could have gotten out at like 21 cents. So again, just these small little things that I feel add up on a day where it's not quite working. Okay, so let's look about the two swing trades that I took. The first one is Caesar. So here was a setup on Caesar. Big move down lower. It had broken through this horizontal support, and I'm leading on that level. So I took the May 2nd $30 puts for 470, which is a 1.5x position. It's a little bit bigger, but it's a longer term swing. And I know that, taking a 70% loss somewhere over here is about a full one size loss. So it's pretty unlikely I'm going to take the absolute max loss on this guy. But I think something like a 60-70% loss is certainly possible. The other thing on Caesar is a couple things. First, earnings. So earnings on 429 was checking that. The second thing was you want to check Macau gaming revenues. That was just announced on March 15th. So it looks like over the weekend, not a huge reaction to that, but you want to keep that in mind because if that is, there is some big reaction to that. It's almost like a mini secondary earnings, I would say, for these stocks. Caesar, LVS. I think of all these casino stocks here. Oh, that's Chinese stocks. Where's casinos? Yeah, Wynn, Penn, MGM. So all of those, you want to watch out for those Macau gaming revenues. The other thing you want to check too is just some peer earnings, which I actually have not checked here. Peer earnings. There's LVS on 416, so you can see if there's some correlation to that. That's the only minor risk, but everything else happens after Caesar, so I'm not too worried about that. You definitely want to check LVS though. Market had also broken this trend line to the downside. Now, a couple things here. I'm going to go to this SPY chart, which is going to look like an absolute mess for a second. So I'm going to just do a couple of things. I'm going to remove these drawings here. And Dave called out this trend line from 1023 touching up over here. That SPY was kind of bouncing. So there was that call out over there for that trend line. That's coming to play. We gapped down below it, and then we closed above that trend line. Marginal new low versus the 550 that we saw earlier. Poked down to maybe 547 today. But that was kind of rubbing up against over here. So I was in an interesting position where you could say, okay, on one hand, look, we broke through this bullish channel. We rejected the 50 SMA on some confirmation. However, we are big against some support. So do you want to go short here or do you want to go long here? Now, my thinking was, okay, I don't want to take a short-term swing trade on here, but I am okay with taking a longer-term swing trade. That's fine with taking some heat back up to the 200 if that happens. This is my line of the sand for when I shut down the shorts. I'm okay with taking some heat up to the 200, and I can add to it on a failed bounce. So because I have a longer time horizon and my market thesis is bearish, with some heavy selling pressure, it's more likely that we can actually get through some of these levels. If you have a pretty short-term swing trade, you may have to get out of the way of a bounce and then reload on another failed bounce. And see if that one is able to clear that support early in the day. So that was Caesar. You can see today it's actually holding up pretty well. It's held all the gains of the prior day, had this bullish hammer, lots of volume, but did pretty well. Now you can see that honestly after these candles here, it might still see some selling to the downside on at $24. So you got to keep an eye on that over here. But with a month to play out, I think I have some room to this guy until definitely until 20. I would say 20 would be a pretty big drop. I don't know if it's going to get to 20. That's going to be a pretty big leg lower. But if I catch this leg well and I'm right about the market, even something like $22, I think 22, $23 is a little more realistic. But 20 is not out of the woods. I think it's still potentially possible. We need to see some big selling, and also there's going to be some earnings released this month, so the market may react negatively to those earnings. Here's some of those negative reactions in February as well, some of the mixed reactions early in January. So we'll see how the month plays out for that. Next short I took was NTAP. So on NTAP, I took the 95 puts, the 5/16/95 puts for 8.20. So about a 2.5x position here. So overall, I'm swinging about 4x size. And the way I'm doing that is if you just add the 8.2 plus the 4.7, you get 12.9. My standard position size is a $300 max loss. So you do 1290 divided by 300 is about a 4x position size. Or, that's kind of my exposure here swinging. These are longer term swing trades. I got the setup, not the ideal setup, which is why I didn't take a whole ton more. But I figured that it's bearish enough for me to I wanted some exposure after this candle, and I'm okay with a little bit of bouncing over here while I wait for the next leg lower. So that was NTAP. What I liked about the stock, we had a big drop, not a strong rally, preserved most of those gains, and we actually cleared through that drop pretty well on the 28th. Now, there's some minor support here at about 86.89. If I look at NTAP over here, oh boy, where is it? Yep. So there's like this gap all the way from November, December 2023. So some minor support here at the close, but held up really well versus the market today. And I think with any more tailwind, we can break through that gap. So on NTAP, I'm holding through there. I think there's some room on this guy, potentially all the way to maybe 80. I think 80 would be a pretty good line in the sand. So super happy with 80 if I can get that on the win there. Given the ATR of $3 in my time horizon, I think a 3 to 4 ATR move is very, very possible. Even a 5 ATR move is potentially possible as well. On that guy, that's a pretty big move. But yeah, took NTAP over here. So both of these are currently in profit. I'm okay if they take some heat against me. I am willing to add to these trades if I get the market and stock price action that I need to see, which is this bounce fizzles out. We get some sort of test here, shorter bounce, and then we can't get off the deck over here, right? This is just a really, really weak bounce. We preserve most of this halfway of this green candle, which is about 560, even 565 I'm okay with. If I get a taller bounce, right, I'm going to be a little more careful, and I might exit those long swings in the next drop because we didn't get the move necessary to materialize, and this could be a marginal new low over here. So I'm not saying that will happen. I'm just saying when you're preparing for these swing shorts, you want to outline all your scenarios here. And the couple scenarios I see is that, one, we either base out here and we flatten out for a while. We get a strong leg up higher, which I think is the least likely scenario, maybe like a 5 or 10% chance. Not super worried about that at this point. We need to see some very strong stack greed candles on good volume. And also maybe lots of gap and go ups that hold. That's usually what happens here. If you look at this move, even like this move here, right? It's like gap and go up, gap and go up. Like all the gap ups have follow through and they hold. So all the overnight gains are preserved, and that happens in many consecutive days, which you only really see on strong kind of tests of support. The other more likely action, I think, is we get a double top lower high, and then we roll over and we crack this 550 level. That's, I think, the most likely scenario. In my head, I'm giving it like a 65, 70% chance of happening. And the other 20% is that we kind of get back up to this level. We reject up over here, but we're unable to get back to 550. So that makes me a little bit more neutral, and then I might get out of my long-term swing shorts, see on the sidelines, and then just kind of see what the market does for the next move lower. Other thing I'm watching for in a longer term horizon is that we got this 100 crossing, the 50 crossing the 100 over here. So the more time we spent below the 200, that means this 50 is going to start coming over here. We might get that bearish cross. And that is, quote unquote, officially the technical pattern when we're in a bear market. Okay, so those are the trades this week. Overall, I had one pretty nice win on Abbott. And then I had just a couple of scratches throughout the week. I'd say CLS, and then one kind of decent loss on Tesla. So not a whole lot of action. Be on the lookout for my Q1 review. I'm going to go way more in depth into the P&L side, the business side, try to analyze what went well, what went wrong, how can I improve for the next quarter. These videos are a lot more technically focused on things like what's the market doing, what's my stock pick, how am I entering these stocks, what am I seeing, what's my rationale for entering, what's my rationale for exiting, and so on. So the other one is going to be more, I think, business focused with some technical elements mixed in, because the technical elements are going to be what drive your profitability. And so those are going to be the drivers that you can choose. Things like what sort of setups you take, or what sort of market situation you're waiting for, or what specific type of entry you were looking to take. So both of those work in concert, but the business side will come out a lot more on those videos. Thanks for watching, everyone. I will see you all in the next video.